Welcome to another episode of Hiring and Empowering Solutions. My name is Molly McGrath, and I am the creator of this office altering podcast. If you're a first-time listener, welcome. If you're a returning listener, welcome back. As always, you can check us out at hiringandempowering.com. All right, listeners, we are going to have so much fun today. You're all entrepreneurs, you're all business owners, and you are always about increasing your revenue, knowing your numbers. So today, I'm so excited. I love the name of our conversation today, From Panic to Profit. How many people cannot resonate with that one? How 6 key numbers can make a six-figure difference in your business and your law firm. And I'm so excited to have our guest today, Brooke from Cathedral Capital. Brooke, I am so excited to have you here as president and founder. Give us a little bit of your backstory.
Well, I think there are 2 things that you need to know about me. First, I understand attorneys. My father's an attorney, my brother's an attorney. 2 of my uncles are attorneys. Can't even tell you how many cousins. And then there are all the guys I've dated. They have almost all been attorneys, including the ones I dated in high school that grew up to be 6'2" left-handed lawyers who wear glasses. I don't know. I got a type. And the other thing is that I come to this from a place of having grown and scaled a law firm to 7 figures. And also with my own company, having gone through a lot of what entrepreneurs are encountering these days. So in 2015, I fired my biggest client, and he was 94.3% of my business. I lost money every month for 26 months in a row. I encouraged a full-time person to leave. I took a full-time person and made them part-time. I maxed out all of my lines of credit. I took every penny of the equity out of my house. I maxed out all my credit cards. And I think really the low point on that one came when I applied for my last credit card, and I got it. $900 limit. Yay. And I spent a lot of sleepless nights worrying, was this business going to make it? And I think a lot of people can identify with that. And as I said, the low point came with that $900 credit card. And I waited for that to come in the mail every day because I needed the cash. And it came. And at 11 o'clock at night, I drove to the other side of town where no one would recognize me because I was so mortified about what I was about to do. And I went to a bank and I did a cash advance for every penny I could get off of it. And as I was sitting there, 11 o'clock at night, in the dark, other side of the town, I leaned back in my car and I realized, oh my God, I'm a fraud. I own a fractional CFO company. We are here to make companies more profitable. And here I am. I've been running a loss for how long? And I knew I needed to do something. So the next morning, as I go to the bank with that stack of $20 bills, and I kind of slide them across the counter to the teller, and I'm wondering, okay, does she know that I'm a fraud? Does she know that my company's on the brink? The big question is, the brink of what? Was I on the brink of success or the brink of failure because I needed all that money? All I could get off of the $900 credit card, which, by the way, if you haven't ever had to do that, is not all $900. I had to deposit that to be able to make payroll that day. And so I realized that I needed to hire us. I needed to treat us, my company, as if we were a client. And so we did. And everything I'm going to talk about today is what we did in our company. It's what we've done with law firms. And so today, instead of not knowing if I'm going to make payroll and be able to keep my people, we are consistently hiring instead of wondering if a charge is going to go through on a credit card. We're 100% debt free. And instead of wondering if my business is going to make it, I know that it is. I know that we are profitable and we are moving forward, and I can really count on that. And so I'm very passionate about creating that for other people.
All right. I know everybody's had, here's $1 million question, literally it sounds like 6-7 figure question. Why did you fire your biggest client?
He was not a core value match. He did business in a way that was different than what we did. And I felt like I was spending all my time standing between him and my team. And that wasn't the business I wanted to run. So I fired him.
That took a tremendous amount of courage, and it sounds like a very, very pivotal point in your business.
It was. I mean, it was. So, when I talk to attorneys, they're always so worried. So I was talking to this guy, one of my first clients, and he said, now, Brooke, I'm going to have to show you my underwear drawer. And I'm like, what? He's like, that underwear that's in the back of the drawer that's like, it's got some holes in it and the elastic shot and it's got some skid mark stains. And I'm like, okay, I know your wife. I really need to call your wife and tell her you need new underwear. I'm like, I think you're going somewhere with this. Let's say I understand. And he said, I'm going to have to show you that. I'm like, yeah, you are. To work with us, to be profitable, you got to show me the good, the bad, and the ugly. And here's the thing. I've seen worse. I've seen companies that had multiple 6 figures of credit card debt. I've seen companies that have owed the IRS $2 million in payroll taxes. I mean, I promise you, I have seen so much worse. And part of the reason why I tell my story so freely is that I've been there. I get it. I have put everything on the line. I have been almost like that PI attorney. I don't know how much you work with PI attorneys. They're giant gamblers. And they're always like, let it all ride. All the chips in the center of the table.
Yeah.
I went all in. And so I get it.
Wow. So bravo to, there are so many businesses that can really resonate with firing that D or F level client and the courage that it takes. One of my favorite statements is behind every breakdown is a breakthrough.
Absolutely.
And and then treating your business like you would a client. I love that.
Well, and we don't do that. I mean, do you know how many attorneys I have talked to that have never read their contracts? They send them to me. Like, I am not a licensed. Can't you read your own contract? They're like, oh no. I'm like, this is what the contract says. Really? So you do?
Well, in the embarrassment and the shame, to use the underwear drawer as the analogy, I think so. I know 28 years of coaching and consulting attorneys and law firms. And when it comes time to knowing your numbers, and it comes time, that's why I love this topic that you came up with, from panic to profit, because you have to get real. You have to get vulnerable, to use your terms, with the good, the bad, and the ugly. How much shame? I mean, to your point, you drove across town so nobody would recognize you. And
man, how screwed up is that? Let's just look at this. I was at an event this weekend, and Cy Wakeman was speaking. And I don't know if you know who she is, but she is fabulous and has a book called Ego. And she talks about the difference between reality and kind of what you build up in your mind. Here's the reality of my situation. I had a business that I knew would be successful if I just had a little more time. And I did everything I could to feed all of my people, to feed myself, to keep going. And I knew it would work, and I had faith. And so I did what it took to get through. I don't know that that's really something we should be embarrassed about. Isn't that something we should celebrate?
Yes.
Yeah.
Yes. Wow. You had faith and you just needed a little bit of time to get through.
26 months,
That
apparently, to be
is-
exact. I have to say, I didn't think it was going to take that long.
How many months? 26?
2 years and 2 months.
In the grand scheme of things, that's not that long.
No, it's not that long.
But you
Feels
have come
like
up with a
forever.
process of how to, yeah. So let's talk about how to, the 6 key numbers that can make a 6-figure difference. I love
So
that.
I got to tell you where that came from. I was at an EO meeting. Do you know about EO, Entrepreneurs Organization? Okay.
Oh, yes.
So I'm in an EO meeting,
Yes.
actually in Denver. And the guy who was running it said, okay, imagine this. You're at a 5-star resort on a desert island. There is no phone, no internet, no TV. The only way you get information is from the supply boat that comes once a week to deliver supplies and deliver new guests and pick up departing guests. And you get 3 pieces of information. He will hand you a piece of paper with 3 pieces of information. And using those 3 pieces of information, you have to make a decision about whether you can stay another week or not. And I'm like, wow, like that blows my mind, right? I don't know. What is it? Is it 3 pieces? Is it 5 pieces? So I took it back to my team. I'm like, guys, is it 3? Is it 5? Is it 42? Like, what are the pieces of information? And they said, we talked about it. We demoed it. We worked on it with clients, and we realized there are about 6 different parts of your business, and we needed a key number from each one of those. And if we had a key number from each of those 6 parts of your business, you would have a really good feel for what was happening. So we don't think it's 3. We think it's 6. You want to hear them?
Yes,
Okay.
please.
So the first category is cash. We all know that cash is king. But what we really want to know is how much cash we're going to have at the end of the week for the next 6 to 8 weeks. Because Molly, you know as well as I do that revenue does not come in and match our expenses, right? The first and third weeks are always the most expensive weeks of the month. And most clients, I don't care what your invoice says, they think they can pay you in the 4th week. It can say due upon receipt, it can say due in 10 days, and they're going to pay you on the 31st. So, having a cash flow forecast, knowing when the money's going to go in, knowing when it's going to go out, looking 6 to 8 weeks out, you can come up with a plan if there's a problem. You can get a line of credit. You can move bills around. There are all kinds of options. So that's cash. The second one, the second category is what we call ideal ratios. And really, the most important number here is owner compensation. We want to make sure that the owners we work with are being properly compensated for the time, effort, and truthfully, the financial risk that you're taking on as the owner of that firm. Okay. Then we start looking at some other ones. We look at production, how work moves through your firm. We want to know what your WIP is. If you're an hourly firm, this month's WIP is next month's revenue. So again, we want to start to be able to look ahead. We want to look forward. We want to be proactive, not reactive. So knowing what the WIP is allows us to do that. Of course, another area where we want to look is marketing and sales, right? The key number here is sales calls booked. Because Molly, I think most of the attorneys you've talked to can say, oh yeah, if I get them in a room, blank percent sign the fee agreement, right?
98. They all say 98.
98%. But if you know how many sales calls you have booked this month, then you know how many new clients you're going to have next month, which means how much additional revenue you're going to have the month after that. So again, we're starting to stack these things so that we can look further and further ahead. And then the next one is when we look around case management. And the number we want to look at is net new cases. So how many cases do you have? If you sign up 5 new cases and 3 of your cases close, because, cases should be resolved and they should close, then you have net new of 2. And this is where we start to look at your people. So if you know that an average attorney can handle, I'm going to make up a number just to do easy math. If you know an attorney can handle 10 cases and you're net new 2 cases per month, that attorney's going to be maxed out in 5 months. And wouldn't you like to know today that attorney's going to be maxed out in 5 months, as opposed to at 5 months when he's screaming, oh my gosh, I'm totally overloaded?
Yeah, absolutely.
Yeah. So when we look at it, the cash flow forecast, your WIP, your sales call, and your net new cases are all forward looking. And the 2 that get you back on track are owner's compensation. Are you getting what you need to be getting? Are you being compensated? We talked about that one. And then also the budget versus actual report. Now, we don't like the B word, budget. Budgets suck. I mean, come on, let's face it, Molly. We're entrepreneurs. We're all about the possibility, not the prohibition. And the last thing anybody wants is someone telling us what we can't do. And everyone feels very constrained by a budget. So we don't like budgets. We don't think anybody needs them. We do think they need profit plans. How are we planning to spend money to make more profit? Unfortunately, I have not been able to convince Intuit, the makers of QuickBooks, to change their verbiage. So it's still called budget versus actual report. And what that does is that lets us look and say, where are we off track for our goals? Where are we doing really well? If we're doing really well, what was the cause of that? So that we can keep going with it every single month. And if we're not doing well, what was the cause of that? The root cause. So let's fix it so we don't have that problem going forward. So those are the 6 numbers.
Wow. Do a recap for us too, please.
The 4 that look forward are your cash flow forecast, your WIP, your work in progress, sales calls booked, and net new cases. The 2 that help you get back on track are owner compensation. Are you being fairly compensated for the time, effort, and risk you're taking on? And your budget versus actual. Are we on track to hit our goals?
Tell me a little bit about this owner compensation. I love that in regards to how that gets you back on track. Most of the law firms I work with, they do pay themselves first. They learn that through the E-Myth and Cash Flow Quadrant and all the books that came out in the 90s, what have you. But how does that get you back on track?
If you're not being compensated, if you're not hitting that compensation number, and in the compensation number, your total comp number is based on the size of your firm. So, for instance, if you are doing between $500,000 and $1 million, you should be taking home about 50% of what's billed and collected in your firm. And as total owner comp. Now, owner comp comes from a number of places. It comes from, especially if you're an S Corp, it comes from the salary that you're paying yourself. It comes from the money that you're taking out of your firm to pay the taxes. It comes from your draws or your distributions. And the other place is, I mean, let's face it, we all run expenses, personal expenses through our business. And like, I don't care. If you and your accountant are good with that, I'm fine with it. But we all do it. So let's be cognizant of it. Because there are some law firms that don't look all that profitable on paper because of the way we're compensating the owner.
Mm-hmm.
And by the way, that's a total double-edged sword because you don't have to pay a lot in tax, but it also makes it really hard to get a mortgage.
Right. Treat you like a third-class citizen.
Yep.
Yes. Yes. What about under 500,000?
So under 500,000, if you're at 0 to 250, you really should be about 70%. So if you're doing $100,000 a year in your law firm, you should be taking home about 70,000. And the biggest difference here in almost all the scenarios, by the time we get up to $1 million, you should only be spending about 35% on your people. But you're your biggest payroll expense, right? If you have less than 250,000 in revenue, it's you and maybe a paralegal or an assistant, right? As you cross that $250,000 threshold and you're now at the 250 to 500, it's you and a paralegal. And as you start to cross the $500,000, now you're starting to add another attorney, a second paralegal, or a receptionist. Like you're starting to add to your team. So in the beginning, there aren't a lot of expenses that don't go to you, right?
Yeah. So how would you say that gets you back on track in regards to your
It
profit?
enables you to see if you're not being compensated, what do we need to go back and look at? Where is the breakdown? Where is the problem? Because ultimately, it's total owner comp that we care about. None of us started our own business to lose money. We all started our own business for our own personal benefit. And we benefit numerous different ways. You know, you get to build your reputation. That's nice. You get to be more flexible. That's great. But really, it's about the money.
It is. And I so often when I get that phone call and I'm sure you can appreciate this and you begin to feel resentful. And if you listen to my podcast, you've heard me. I found this definition of resentment during the pandemic, listening to podcasts and doing everything I can for personal and professional development. And the greatest definition of resentment I heard is that the definition of resentment is self-abandonment. So when you start to resent your employees, your business, what have you, my number one question is tell me about your paycheck. Tell me about what you're getting paid. And I would say 10 out of 10 times, they're not getting paid what they envisioned when they hung their shingle.
Oh, and I bet you get this. Everybody's getting paid more than I am, and I'm working harder than anybody else.
And nobody cares as much as I do.
The matter is, nobody ever will care as much as you do.
I know Gary Vee did an amazing YouTube video on that. Search that in regards to Gary Vee on employers. Stop saying that your employees don't care as much as you do because it's not their job to, and they won't. And when I watched that, it really transformed a lot for me and really helps with eliminating that resentment and the unrealistic expectation.
Well, and realize that part of the reason why you care is it's your money and your Social Security number on the line, right? You're the one that signed the lease. You're the one that put a personal guarantee on the line of credit or the credit cards. I mean, it's you. You've got a vested interest in this, in this firm working. And so we're a traction company. We run EOS. And
Yes.
our implementer a couple of months ago I don't know if he told me or if he told all of us or told one of our leadership team on the phone. I can't remember who. Anyway, he said, every single person in that company can leave except for Brooke because she's the owner. So yeah, there's a lot more on the line for us as owners. We can't leave. This is it.
Right. Absolutely. And hopefully you're going to have an EOS business, because then the only time that you're leaving is when you're selling it, because you have a system-based
That's
business.
right. Let's get these.
Yeah, a profitable one, and you have your numbers and you can answer into these 6 different areas, and you have reporting and tracking and measurements that is based on data versus
Absolutely.
emotions.
You know, Gino Wickman wrote the quote for the front of my book. And he said, there are many books that help you strengthen your data component, and Brooks is one of the best. We're all about making data-driven decisions.
Oh, wow. Oh my goodness. What an honor.
So cool.
What an honor. Yes. So how does this make the 6-figure difference? You're hearing this, you're listening to it. Maybe you're hovering below that 6-figure number, and maybe it's inconsistent. Sometimes it is, sometimes it's not. You're reaching it. How does adopting the 6 key numbers make that 6-figure difference, especially if there's some firms that are, toying with that or hovering
Struggling.
or fence sitting on that number?
Yeah. Well, I think it gives you control. It tells you where you're not working. And more than any of them, I said that there are 6 areas of your business, and each one has a key number. The owner's compensation goes in the area of your business, the category of the ideal ratios. And we believe that you should run a business on the rule of thirds. 1/3 of revenue should go to people, 1/3 should go to overhead. Yes, that includes your marketing, and 1/3 goes to profit. And we have a thing called the Profit Finder. We use it with our clients not every month, but we do it with our clients on a fairly regular basis, where we put all of their information in, and it spits out a report for us that says where they're overspending and where they're underspending. And so then with that, it says, okay, you're spending too much on your people. Here are the places to look to fix that. You're not spending enough on your marketing. You're not spending enough on your people. This is one of the ones that always amaze me. People are like, oh yeah, don't pay my people anything. It's awesome. I make so much money. I'm like, uh-huh. And you got a lot of turnover, right? Yeah, but I got that attorney for $31,000 a year. I'm like, oh God, you get what you pay for. But what's the cost of turnover? Like, there's a cost to that. And so we go over the Profit Finder fairly often with our clients, sometimes as often as every month when we get their new financials back, so that we can see, where are we off? Are we spending too much on marketing? Okay, let's go dig in there and find the root cause of the problem and fix it. Are we spending too much on our people? Okay, yes. Well, it's a people problem. Does that mean that we're paying them too much for what they're producing? Or are we paying them an appropriate amount, but they're not producing them enough? Those are 2 separate problems.
Or do we have too many people on the bus?
Yes. Or do we have too many non-billable people?
Yeah.
Oh yeah, we're doing $500,000 a year, and I've got a marketing coordinator, and I've got a receptionist, and I've got an intake person, and I've got a this, and I've got a that, and I've got a person who wraps Christmas presents and runs errands. Yeah, no. 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 Too many people on the bus, Molly. You're right.
Too many people. Or sometimes, so often, people say to me, well, my receptionist doesn't make me any money. They're the most profitable position in the building if they have their KPIs and they're very clear on them, and you're actually tracking and measuring them, because how many appointments did you miss? To your point, how many sales appointments are you missing because they suck?
And so when I was running my family's law firm, the receptionist was awesome. And when I left to start this company, I gave her a lot of my responsibilities in running the firm. And I said, Julie, we can't ever take you off the phones, and we can't ever move you from the front desk. And she kind of looked at me like, really, why? She was amazing at connecting with our clients. Our clients would call and tell her all kinds of stuff they wouldn't tell their attorney. And she would relay this to the attorney, and it just helped us be so much, just a much better advocate for our clients, because we had more information. And Julia was the only one, and it wasn't that she was trying to weasel information out of them. She was just sweet and nice and kind and genuinely cared, and they shared with her. And you could not put a price on the value that brought to us and to our clients.
Indeed. And I'm just even thinking of like her growth plan that you have for her when she's conveying and she's present and she's communicating, giving you their exact words. She better be handing that over to marketing, because it's a subject for our blog, for our newsletter, for our webinar, for our podcast. You speak into other people's listening in a way that makes a difference for them. And so she's now your copywriter, your marketing department, in addition to your client services, VIP, conversion. She's a conversion queen. And when you communicate that to her of what the value she's bringing, and put her on some kind of bonus structure, incentive-based compensation plan based on that, you don't care. I can't tell you how many people will call me and they're like, I just need a receptionist. I want to pay her. I don't know. My friend at the bar association got a great person. They're only paying her $12 an hour or what have you. I'm like, okay, guess what? My 16-year-old's making $19 an hour right now. So I get that but they got a great person. What's their definition of great? How do they quantify that? What are the trackable? Like, it's not all created equal.
Absolutely.
So amazing. Tell us a little bit about, I know you have a gift for our listeners.
I do.
Today.
I actually talked about it earlier. It's, I would like to give all your listeners the Profit Finder report, the one that we use with our clients.
Great.
Yeah. So all they have to do is, and I'm guessing you'll put this in the show notes, go to cathcat.com/Profit Finder Molly.
That's easy.
We'll do it just for you. So, they can go and they can put in their information. And I'm going to tell you right now, you need to have your P&L in front of you. If you don't know what a P&L is, it's your profit and loss statement. Go talk to your bookkeeper. She's got one. So get your P&L for the year and go through and put some information in. It's going to ask for how much your revenue was, how much you collected. It's going to ask for how much you paid your people. Now, remember, when you pay your people, that includes any insurance costs, taxes, all of that. It's going to ask you how much you spent on marketing. It's going to ask you how much you spent in total. It's going to ask you for like 6 or 8 pieces of information like that. The one that may be a little tricky for you, not tricky for our clients because of the way we set up their P&L, but how much do you run through the firm? How much personal expenses are you putting through? And again, I don't care. For heaven's sakes, you should see some of the stuff that my accountant says I can run through. It's all good. But if you have those pieces of information, it takes just a few minutes to get this done. And it's got so much great information.
Excellent. So I assume they're going to get a report that's going to give them a snapshot.
It'll give them a snapshot. There's a whole page on best practices. There's a page on where you are in comparison to the best practices. And then we go deeper into each number.
Great. Oh, thank you
pleasure.
for that. Well, I want to make sure. So again, for our listeners who might be out exercising or driving or what have you, and not accessing this on your computer with the show notes, you want to go to cathcap.com. So it's CAT as in Thomas, H as in hat, cap, C as in Charlie, A as in Apple, P as in Paul.com. And I really highly recommend that you get Brooke's international best-selling book with the foreword from Gino Wickman I learned today, From Panic to Profit. And there's a link right at the top in the hello bar there for you. And then again, we'll also go ahead and give you this free, amazing gift from Brooke to be able to get your snapshot report and get her report. Thank you for giving that to our listeners today.
My pleasure. It's something that our clients have found so valuable over the years that I'm like, we just need to share that.
Yes, absolutely. Absolutely. And share with our listeners of how you took your company and completely dismantled it. And how big's your company now?
So I think we've got 12 people and like 4 or 5 contractors. And how did I get from firing 94.3% to this? I looked at my numbers. I made data-driven decisions. I understood where our revenue was coming from, how we were using it, were we using it appropriately, how much cash did I have every week for the next 6 to 8 weeks, what were my net new clients, what was my conversion rate on sales calls booked, and did I have enough sales calls booked? The answer was that.
Yes.
That was not in the beginning. And was I on budget? What was the plan? Am I achieving the plan? Am I not achieving the plan? And, what's really fascinating is people will say, I'm not on budget. I'm not achieving the plan that we thought about. And especially when we're talking about revenue. But I'm like, look, not achieving the plan is just as important. Like, what did you think? Where were you wrong? What was the assumption that you made that didn't come true? Let's know that so that the next time we do planning, we're more accurate. And then, compensation. Was I getting paid for what I was doing? Yeah, not before I had that, thought as I'm sliding the stack of $20 bills across the counter. But after that, you better bet I was getting compensated.
I don't think there's a listener who can absolutely resonate with that at some point within their career of where they've been. Oh, Brooke, thank you so much. So Brooke Lively with Cathedral Capital, thank you for being our guest today and speaking about From Panic to Profit and for the amazing work that you are doing.
My pleasure.
There.
Thanks so much for having me, Molly.
Okay. Until next time, we're going to have all the links down there in the show notes for you all. So listen, no shame, no blame, no embarrassment, know your numbers. Again, you probably hear me say this a million times. The root of all anxiety is lack of information. So once you have that information, then you can make informed business decisions. If you like what you hear on our podcast, please feel free to visit our website at hiringandempoweringsolutions.com. So we love that you are listening to this podcast. Please drop us a line with any feedback, suggested topics you'd like to hear. And absolutely, we'd love to hear about your victories and your win in regards to creating entrepreneurs in an entrepreneur's world.